All right. Good afternoon, everyone. This is Joe Bicella, Director of Client Success here at Chaikin Analytics, and I'd like to welcome you to our presentation of Marc Chaikin's checklist, How to Improve Trading and Investing by Combining Fundamentals and Technicals. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics. Now, this webinar is being recorded, and we will be sending a copy of this to everyone who is registered for our presentation. Please submit your questions via the GoToWebinar chat window. Before we get started, we would like to go ahead and introduce our guest, Marc Dannenberg, to the webinar. Marc is the founder and CEO of Options Moneymaker and has been trading personally for over 26 years and has been teaching traders since 2006. Marc's teaching style and experience with all market conditions is the perfect combination for any trader hoping to improve their trading. He is actively engaged in the markets every day and guides traders through the real-time decisions necessary to succeed through his daily position reviews. Marc's desire is to help people achieve financial liberation and lifestyle freedom through options trading. So now to get us started, here's Marc Dannenberg.
Thanks, Joe. I really am looking forward to being here today and listening to Marc Chaikin. So those of you who are part of the Options Moneymaker community, I think, have a tremendous opportunity today to learn something from Marc. I have really enjoyed partnering with Marc since I met him just about a year and a half ago at a seminar, and I came to realize very quickly that he had a tremendous amount of integrity in what he does and a sincere desire to help people really learn to be successful. So if you want to benefit from years of experience, Marc is a guy to listen to. He's been on Wall Street for 40 years. He's been a trader, a stockbroker, analyst, and an options trader. So much like what we've done at Options Moneymaker, he's very focused on leveraging that 40 years of knowledge and experience and translating it into something that's actionable by people who really have a desire to be successful with their options trading. Marc founded the Chaikin Analytics group in order to really deliver stock analytics to investors and traders. It's all based on the Chaikin Power Gauge, which is a 20-factor alpha model, which is proven effective at identifying a stock's potential. And that's one of the keys, folks. That is one of the keys to trading successfully. You want to be able to identify what a stock is likely to do in order to benefit from that move. Marc pioneered the first real-time analytics workstation for portfolio managers and stock traders, which is now part of the Thomson Reuters institutional workstation. He's developed computerized stock selection models and technical indicators, including the Chaikin Money Flow, which is an industry standard. So Marc's a great guy. I mean, he's a great guy personally. He has a tremendous amount of passion for helping people learn, and his wealth of knowledge is something that you can tap into today. So I welcome you, Marc. Thanks for being here.
Marc, thank you for that very, very kind introduction. And welcome, everybody. In today's webinar, we're going to use my checklist to help you learn how you can get a directional edge, which is so critical to options trading. Now, a little bit about my background. Marc was very kind. I've actually been on Wall Street for 50 years. And for 45 years, I've been using technical analysis, but always recognizing that fundamentals drove the market because institutional investors basically use fundamentals to make their investment decisions, but recognizing that you need a technical analysis to preserve your capital in bear markets and to help timing in options trading, swing trading, and so forth. My background in technical analysis became really valuable when I took over the options department at a regional brokerage firm called Tucker Anthony and R.L. Day, and I'll get into why that's so important a little bit further on in the webinar. Along the way, I've been mentored by some of the smartest and most successful institutional investors and analysts. Some of them were colleagues, some of them were clients. But the reason that's important is that everything I learned from these successful investors is embodied in the Chaikin Power Gauge rating. I created it in 2010. I came out of retirement. It's the culmination of my life's work, and Mark Dannenberg really hit it. I'm passionate about this. I came out of retirement after the financial collapse of '08 to give something back. Started this company with just my wife Sandy and myself. We're now 27 people dedicated to your success, and that's why we're here. We've been fortunate that the Chaikin Power Gauge and Chaikin Analytics has been quoted in the media, and it's also now being used by some of the top professionals in Wall Street, like Soros Hedge Fund and Paulson, and more recently, John Malden at Malden Economics gave us a big shout out in his Thoughts from the Front Line weekly newsletter. We've been written up in Barron's and Forbes and so forth. Barron's called us one of the top 2 quantitative sites on Wall Street. Now, today's webinar is about 5 steps to supercharge your options trades. You're going to find out how to pick the winners and losers with the Chaikin Power Gauge rating and Chaikin Relative Strength. We're going to show you a secret technique that we've been teaching to institutional investors for over 30 years, using Chaikin Money Flow to anticipate future price movement. We're also going to show you how to use covered call writing to enhance returns using some proprietary Chaikin analytics. And I know this is very important to the Dannenberg options community. And so we're going to focus a little bit on that. We're going to show you how to play good defense, how to avoid landmines that destroy all the hard work that you put into a portfolio or a trading account in the course of a year. And then we're going to show you how to use options during earnings season to profit from volatility instead of being scared by it. And as a bonus, we're going to just touch on how to use Chaikin ETF ratings to find winning ETFs to trade and winning stocks in those ETFs. So I'd like you to look back over the last 3 months of the market. And by the way, we closed at a new all-time high in the major averages today. Did Brexit and the Fed and volatility have you spooked? If you did feel uneasy, or more so by the scare headlines and talking heads on CNBC, type a big Y in the chat box. We're using new webinar software today from a company called Zoom, and not sure how visible the chat box is, but hopefully you found it. And if you're like any of our more recent webinar audiences, you were spooked. There were scare headlines everywhere. And for that reason, I'd like to start the webinar off and focus on the market and how you can become independent of the market gurus on CNBC or the various financial blogs or websites. So in order to know where the market's headed, we look at 3 proprietary technical indicators in Chaikin Analytics. Now, Chaikin Money Flow, which I created over 35 years ago, is available on every one of your online brokerage platforms, whether you use Thinkorswim or Options House or Schwab. And it's also available on websites like stockcharts.com. We're going to show you a very powerful way to analyze the Chaikin Money Flow on the SPY and later on individual stocks to give you a clue as to where the market is headed. We're then going to look at something we call the Chaikin Power Bar. For every list, industry group, index, ETF in Chaikin Analytics, we have a bar that tells you the number of stocks with bullish, neutral, or bearish power gauge ratings. And once we explain what the power gauge rating is, you'll see how important that can be because the power gauge measures the potential of a stock to go up over the next 1 to 6 months. Then finally, something really special, relative strength of something called the Guggenheim equal weighted S&P. Most of you know that the S&P 500 index is capitalization weighted. That's why last year those infamous FANG stocks, Facebook, Amazon, Netflix, and Google, had a disproportionate impact on the S&P 500. Most of the stocks in the S&P 500 were actually down in 2015, experiencing declines of 20% or more, which is bear market territory. But because these large cap names did so well, the S&P 500 index finished the year up a fraction of 1%. We're going to show you how to use the relative strength of the Guggenheim ETF with the symbol RSP versus the SPY to have a strong clue as to what the market's likely to be doing. So on the screen now is a one-year chart of the SPY, the largest ETF in terms of assets and also the most actively traded. And let's look at those three technical indicators, starting with this W bottom in January and February. Now, one thing I like to stress is a little bit of history. Declines of 5 to 10% typically end in the shape of a letter V. So we have V-shaped bottoms and W-shaped bottoms. And starting in October of 2011 through April of 2015, every decline was contained in that 10% area, and you got V-shaped bottoms. That's why the people on CNBC who were telling you to buy the dips were absolutely spot on. But bigger declines tend to require more work before that bottom is formed. So we had a W-shaped bottom in August and September, that infamous August 24th, when the Dow futures were down 1,000 points pre-market, and people put in market orders to sell ETFs and got absolutely hosed when the market makers backed away. But let's start with this bottom in January and February. On December 15th, the Fed raised interest rates for the first time in 10 years. The market started down, and you got a pretty steep waterfall decline from over 2050 on the S&P 500, 205 on the SPDR, all the way down to 180. That's a scary decline. But something very interesting happened in the middle of the W, right here. Chaikin Money Flow went positive when the market retraced part of that decline. If you go back to August, you had a similar rally in the middle of the W, but Chaikin Money Flow stayed red or negative. It was below the zero line. Now, Chaikin Money Flow looks back over 21 days. Many of you know that. In January, when you got that rally up, the institutions were actually buying the rallies. There was some short covering, there was some clamor to get equity exposure, so that when you came back down and tested the previous bottom at 1809, you actually equaled it on the S&P 500 index. Chaikin Money Flow was also positive. Well, that's a pattern we've been teaching institutional investors. It's a secret pattern using Chaikin Money Flow that you won't read about in any book, or if you go on stockcharts.com, their explanation. Nobody gives you this. Chaikin Money Flow on a decline should go red. If you get a steep drop, as you did from 190 all the way down to 180, and Chaikin Money Flow stays green or positive, that's telling you that the institutions are actually buying the decline because of the way Chaikin Money Flow is computed. So we made the W bottom on February 11th. I give Jamie Dimon, CEO of JP Morgan Chase, all the credit. He doesn't want it. He came out and said, I'm buying $25 million worth of my own stock. The market bottomed out, and we were off and running. And as we picked up steam, look at what the Chaikin Money Flow did. It kept getting ever more green, and it stayed green except for that two-day panic sell-off after the Brexit vote, and it resumed its accumulation pattern, so that as we're making new highs in the market, Chaikin Money Flow is positive once again. Now let's go back up to that power bar. 116 stocks in the S&P with bullish potential based on the Chaikin Power Gauge rating, 78 with bearish potential. So it's a positive differential. It's been narrowing a bit. And before we look at the RSP versus the SPY, look at this oversold bottom that we got here in this sideways to down action over the last 2 weeks. What was Chaikin Money Flow doing? It was green or positive. That's one of the most reliable short-term buy signals you will ever see. And sure enough, we picked up and we closed at a new all-time high today in the S&P 500, 2185. Now let's look at the relative strength of the RSP to the SPY. From April of 2015, which you can't see on this chart, through the end of February of 2016, the average stock in the S&P was underperforming the index. How do we know that? Our proprietary relative strength indicator was red. We look back over 26 weeks, just like a lot of other people do, but we make it easy for you to interpret it, and you'll see this in individual stock examples. It's a red-green indicator. It's smooth, so it doesn't chop around a lot. And in late February, it went from red to green, meaning that the equal-weighted S&P, symbol RSP ETF, was outperforming the SPY. Now, why is that important? When I started out in Wall Street, there used to be an expression that if the generals are leading the market, but the foot soldiers aren't following, that was an unhealthy market. Now, back then, yeah, General Motors, General Electric, General Instruments, General Telephone, and so forth. The big companies started with the name American or with General. And the same thing is true today. Now, you can go look at the McClellan oscillator or advanced decline statistics or new highs and new lows. This approach is so powerful that over the last 10 years, whenever the equal-weighted S&P has been outperforming the spider, the market has tended to have an easier time going up and the pullbacks have been narrow. On the other hand, when the average stock is underperforming the spider in the S&P, markets tend to run into resistance. Every decline in the last 5 years has been associated with the RSP red or underperforming the SPY. So when I sum all this up, we write a weekly market letter. We've basically stayed bullish since late February when we broke out above that high that was made in the W. We were tentatively bullish looking for that breakout. And we're still bullish. So don't believe these scare headlines that throw you off kilter. Some big market analyst predicting a 50% drop. He's a perma bear. He's always predicting a 50% drop. Harry Dent, who's been a gold bug all his life, is telling people to sell everything. There's a collapse coming. If you start listening to those scare headlines, instead of doing the analysis that's so simple that we just went through, you're going to destroy yourself. You've got to become objective about where the market is going, and we've given you some indicators to help you do that. Now let's look at the Russell 2000 ETF, the IWM. I know many of you trade that. And here again, the small cap and mid cap stocks were underperforming the S&P from roughly April of 2015, in this case through mid-May. And again, we know that because our relative strength indicator of the IWM to the SPY is red instead of green. But starting in mid-May, small cap stocks started outperforming large cap stocks. And look at the power bar. 708 stocks with a bullish power gauge rating versus 221 with a bearish rating. Better than a 3-to-1 ratio. The action has been in the small caps, and that's important to know. So let's learn a little bit from Warren Buffett. Since we're bullish on the market, we want to find entry points for profitable trades. Now, Warren Buffett has famously said, investors should be fearful when others are greedy, and greedy only when others are fearful. And that's pretty good advice. So here's an example of taking advantage of fear. FFIV, F5 Networks, was in a big steep downtrend. I think you can all see that. And then in mid-April, our power gauge rating went from neutral to bullish. Money flow had started coming in. Investors, traders were accumulating the stock, and then it started outperforming the market. And you had a big spike up one day from 105 all the way up to 125 on takeover rumors. Now, where I have that yellow arrow, we did a webinar, and I highlighted F5, and I'm going to show you what conclusions we came to. But right after that webinar, we had the Brexit vote. That was, I think, June 12th. We had the Brexit vote, and look at that big 2-day decline, took the stock from 120 all the way down to 107, and we got one of our 6 pairs of buy and sell alerts. In this case, it's what we call an oversold buy. The power gauge rating has to be bullish. Stock has to make a new 8-day low. I owe that to Larry Williams, who's been an inspiration to me my whole career. I based my Chaikin Money Flow on work that he did in volume accumulation. The key here is that in order to take advantage of that opportunity, you had to have a methodology that you believed in and the courage to step in and buy that stock at the lower volatility band, taking advantage of fear and watching the stock then go from 107 all the way back to a new 6-month high above 125. Now, when we did that webinar back in June, I used our options play module, which is an options idea module that we license from Options Play because it's so well constructed. It's based on probabilities, just like the power gauge rating. And FFIV was trading at 120, and Options Play didn't have a bullish strategy for us. Every potential, buying the stock, buying a call, or doing a bullish vertical call spread, had a negative rating under 100 with a big red circle, saying the probabilities don't favor making money on the long side. And in this case, we were looking at a July 22 expiration call or vertical spread. Now, what happened was Options Play turned out to be correct. If you had bought the call or the call spread here when we did the webinar with the stock at 120, by that July expiration, you would have lost everything if you had hung on. So we're going to show you some positive trades that Options Play has encouraged us to suggest to people. But I wanted to give you an advanced look of our Options Play functionality. Now, here's another teaser, and you're going to learn how to find these stocks in the course of the webinar. Small caps have been outperforming. So we have a screening capability that enables you to find small cap stocks like Gibraltar Industries, which is in the very strong building products group, symbol ROCK. And the power gauge has been bullish. That's on the bottom. We're going to explain that to you in a minute. It's been outperforming the market. Chaikin Money Flow has been strong. And you had that opportunity on Brexit to buy ROCK on a dip. Now, my wife, Sandy, who also does webinars to the Chaikin community and to our partners' communities, never traded a stock in her life till 3.5 years ago. Using this very simple methodology that we're going to teach you today and our new stock screener, she finds stocks like ROCK and has the conviction to buy them because it's all about conviction. So here's an example of a small cap stock that's been outperforming the market. Since the power gauge and the relative strength turned bullish, the stock's gone from 24 to 40. These are the kinds of stocks that you want. Now, the biggest problem we face today is information overload. We just don't have enough time to go through our email, Facebook, Twitter, LinkedIn, alerts and messages. And in our investment lives, there's just too much information to process. So the key to making money as an options trader or a swing trader or even for your 401k plan is right in the center of this graphic that I absolutely love. How do you focus in the age of distraction? We live in the age of distraction, and there's not enough time to do what we need to do and want to do and spend time with our family and our kids. And as Mark and I were just discussing, our pets. So our solution to the information overload problem is Chaikin Analytics for both iPad and desktop. And we've integrated Options Play, which is a very disciplined, probabilities-based way to find options ideas on stocks that go beyond what Mark is so capably teaching you in his trading room and in his own trading. So if you happen to have a stock that you're bearish on, you can find a good options idea, probability-based, in Options Play. So as we get into the heart of the webinar, how does Chaikin Analytics make options traders more profitable? Well, we do it just like the title says, by giving you a directional edge. And here's where my experience heading the options department at Tucker Anthony for 5 years comes into play. Tucker Anthony had about 250 stockbrokers and tens of thousands of options traders. And I can tell you that 95% of those traders lost money. in spite of my good efforts to educate them. And the reason was they didn't understand the importance of a directional edge. They were using short expiring options to take a flyer in a stock they may have heard of or seen on TV. Didn't realize that if you have a methodology that gives you a directional edge, meaning that more than 50% of the time you're in sync with the market and the stock, and we do that by combining fundamentals and technicals into a quantitative model, and then giving you 6 pairs of buy and sell signals for better entries and exits. Now, you may have your own favorite candlestick pattern, hanging man, 3 cloud formation, whatever, Fibonacci retracements. That's fine, as long as you've got a disciplined methodology for entering trades. Now, the whole Chaikin methodology, which is so important in volatile markets like we've been in, is encapsulated in this pyramid. At the top of the pyramid is the Chaikin Power Gauge Rating, our 20-factor fundamental model. Right under that, industry group ranks. We're going to end the webinar with just a little teaser because we can't cover industry groups and sector ETFs in depth. We'll do that on another webinar. But industry group strength or weakness, particularly strength, can put the wind at your back. It's been proven by Zacks, Investors Business Daily, Standard & Poor's. They've written papers on it. So very important and very integral to the Chaikin methodology. At the bottom of the pyramid, 2 only proprietary technical indicators: Chaikin Money Flow, which you can get anywhere, and Chaikin Relative Strength, which you can only get on our platform. And in the middle, Chaikin buy and sell signals. So important if you're an options trader to get the timing right. Now, the Chaikin Power Gauge Rating looks very simple. I think you'd agree. It looks like the gas gauge on your car. But please don't confuse simple with simplistic, because the Chaikin Power Gauge Rating is a powerful, reliable, proven predictor of whether a stock is likely to go up or down, outperform or underperform the market. And more importantly, it can be your GPS during earnings season. And we're going to focus on how to use the Power Gauge Rating and options during earnings season to take advantage of volatility instead of being spooked by it. Now, the Power Gauge Rating has 20 factors. It's 85% fundamental, only 15% technical. So it solves the information overload problem for you. You don't have to do the fundamental analysis. The Power Gauge does it for you. And these 20 factors reflect what I learned working with institutional investors for over 40 years. These factors are what Wall Street investors and traders, the people who run the mutual funds at T. Rowe Price or Fidelity or Invesco or trade with the big hedge funds, look at these factors. But they don't all look at every one of them. So financial metrics, which is 35% of the model, are what a Warren Buffett would look at, or a value investor. And absolutely critical is free cash flow, because you can doctor up earnings, but cash is cash. And price to sales ratio. You don't want to pay too much for $1 of revenue. That's what people are doing now in Tesla and some of these very inflated cloud computing stocks. Earnings component is very important. I've boxed earnings surprise. This is one of the sharing experiences I had when I was at Drexel Burnham. I was mentored by a guy named George Douglas, who started the best quantitative database on Wall Street. He's still running Quantitative Money 30 years later out in California. And what he did was the original research on earnings surprise. When a company reports better than expected earnings or disappoints Wall Street. And we saw that today with Macy's and then with Nordstrom after the close. Very powerful predictor. And what George taught me was that earnings surprises come in bunches. There's never just one of them. And that's why it's one of the 20 factors in the Chaikin model. And equally as important, when a company reports better than expected earnings, analysts start raising their estimates. And it's been proven that analyst estimate revisions are the most important short-term driver of stock price movement, which is what's going to happen now with the retailing stocks and the apparel stocks, because Macy's and Nordstrom reported positive earnings surprises, finally, after 5 quarters in a row of negative surprises. So these are the more sensitive factors in the model, along with insider activity and short interest. When you sum it all up, this model works because it's based on how Wall Street works. It's not some theoretical model. It's not religious and only finding value stocks or growth stocks. It finds a lot of different ways to like stocks. And the performance of the model, both in the back testing and in the real time, has been spectacular. The model has been commercially available since January of 2011 in the form of research reports on 5,000 stocks based on the power gauge, updated nightly, culminating in our Chaikin Analytics workstation. Using the Russell 3000 as our universe, the average very bullish stock, 428 of them at any point in time, has averaged a 20% annualized return from 1999 through the end of 2015. And even after a 7-year bear market, the average very bearish stock in the Russell 3000 has been down 1%. But in 2015, it really got ugly. The average very bearish stock last year was down 17%. These were your fracking stocks like Range Resources and Kinder Morgan, the retail stocks like Macy's and Nordstrom's, Kohl's, cloud computing stocks, you name it, small caps in general were in a bear market in 2015. So it's that ability to differentiate between the very bearish stocks and the very bullish stocks, which were down only 1% in 2015, that makes this such a powerful tool. Now, 2 other proof points, and then we'll get down to the heart of the presentation. We have 2 partnerships, one with Nasdaq and one with First Trust Portfolios, that validate the Chaikin Power Gauge rating. Nasdaq came to us 3 years ago and said, we've stress tested the power gauge. We want you to create 3 co-branded Nasdaq Chaikin indexes based on our large cap, small cap, and dividend achievers universes. We did that, applied the same methodology you're going to be looking at today, and came up with portfolios with one very difficult hurdle to overcome. You had to hold the portfolio for 1 year because they only rebalance the index every year. And all 3 of these Nasdaq Chaikin indexes have outperformed their benchmarks significantly over the last 2.5 years. The dividend achiever by almost 1,000 basis points. With First Trust, we actually have real money being managed with the Chaikin methodology. On December 7th, First Trust rolled out Series 1 of the Chaikin Low Beta Growth Unit Investment Trust, a 20-stock equally weighted portfolio picked by a computer methodology that uses all the techniques we're talking about on the webinar. And each of the 3 First Trust Unit Investment Trusts has outperformed their benchmark, the S&P 500 index, since they were released, one in December, one in March, and one in June. So $50 million of money being managed using the Chaikin methodology in, again, unmanaged portfolios. We're going to show you how you can do better by trading around the signals using the technical indicators. So the first point on our checklist is to find winners and losers. And we like this methodology we call classic Chaikin bulls and classic Chaikin bears. What is a classic Chaikin bull? It's a stock with a bullish power gauge rating. So that 20-factor model is telling you the stock is likely to outperform the market. That is outperforming the market, so relative strength is strong, and Chaikin Money Flow is green, not red, telling you that this stock is under institutional accumulation. So let's look at a classic Chaikin bull. United Health Group, largest healthcare provider in America, happened to have been picked by the computer, and it's in each of the 3 First Trust Unit Investment Trusts. And this satisfies all the criteria of a classic Chaikin bull. Beginning in February, the power gauge turned bullish. The stock had already been outperforming the market, even in that basing phase. And Chaikin Money Flow showed you that the institutions were heavily accumulating that stock. So you could have bought the breakout above our long-term trend line, or you could have waited for an oversold buy signal. You got 3 of them. But notice another feature of Chaikin. We analyze the last 4 quarters of reported earnings, and we determine whether they were positive or negative surprises, and we put that on the chart for you. So when you look back over United Health, you would have seen that the last 4 quarters were all positive earnings surprises. That means analysts are raising their estimates, contributes to the bullish power gauge rating, and it tells you that this is a stock you want to be in on the long side. Now, before we go on to the classic bears, I'd like to show you a chart that gives me the confidence to do these webinars and try and convince you that the Chaikin power gauge methodology can work for you and is likely to work going forward. This is an idealized chart created by a market analyst named Richard Wyckoff almost 100 years ago. He was the foremost market analyst of his day. And he said this is the way stocks move. They go out of an accumulation or basing phase into a breakout, and then you get corrections and pullbacks along the way. Chaikin Analytics unintentionally helps you find those inflection points where you can buy a throwback or a correction as the market is going up and making new highs. The reason I believe Chaikin power gauge rating will work going forward is not just the 20-factor model, but the fact that it's based on human nature. It's based on the way people react to events and news. And human nature hasn't changed over the last 100 years. That's why this Wyckoff chart is as valid and valuable today as it was 90 some odd years ago. So classic Chaikin bear, very important. It's also critical to playing good defense, which we'll talk about. Power gauge ratings, bearish stocks underperforming the market, and Chaikin Money Flow is red, not green, telling you that the institutions are selling. Now, here's an example of a classic Chaikin bear. I could have used potash, POT. This is CF Industries, one of the largest fertilizer companies in the world. Look at the power gauge on the bottom of the chart, all red. It's been bearish for over 18 months, and the stock's been underperforming the market for almost 12 months from a price of 60 all the way down to 23. And notice that the Chaikin Money Flow was very, very negative in this first downward phase after a negative earnings surprise, and there have been 3 subsequent earnings surprises. So there's George Douglas, my mentor from Drexel Burnham. In real life, earnings surprises come in bunches. Someone once said they're like cockroaches. There's never just one of them. I wish I could take credit for it. It's a clever line. But look at these sell signals. These are what we call money flow sell signals. Stock has a bearish power gauge rating. These are all on our website, by the way, so you don't have to memorize them. We're fully disclosed, whether you're a subscriber or just visiting. We tell you how these signals are constructed. But basically, a stock with negative money flow and a bearish power gauge rating goes above a short-term moving average and drops below it. Think 8-period exponential. Go above the 8-period exponential, drop below it with money flow negative, and we get a money flow sell signal. And wouldn't you have been happy if you were long this stock to have gotten out at 42 or 40 on the way to 23, or to have bought put options? So very powerful classic bear. Now, up until recently, we were using Tiffany as our classic Chaikin bear. Retail stocks been under extreme pressure just until today when Macy's gave us a positive earnings surprise. But Tiffany was in a clear-cut downtrend, dropping from above 90 all the way down to 58. Now, when we did a webinar where that red arrow is back in late May, Tiffany had rallied up, and I wanted to feature it as an options play. So I went into our options play module, and they automatically found a vertical put spread, buying the 63 put expiring on July 22nd and selling the 58 put for a cost of $166 with a profit potential of 200% if the stock dropped to 58 before expiration. And sure enough, it did just that. In about 2 weeks, 2.5 weeks after this webinar, Tiffany dropped down to about 57.5. You could have closed out this trade, not for the full 200%, because there was still a little premium left in the 58 put, but for about 175%. And by expiration, you had a second opportunity to do that. So the options play module combined with the power gauge and our signals, very, very powerful. And we'll end this section with the Wyckoff distribution chart. This is an idealized way to portray how stocks go down. And when you look at a stock like Tiffany or CF, you see these patterns in the market, and we'll see other examples of them. Now, we always get the question on webinars, how do you find these stocks in Chaikin? Well, you find them in two ways. We have a stock screener, which we'll show you in a little bit, and we also have curated computerized hot lists where you can find bullish, or in this case, bearish stocks. And many of the stocks that have been bearish, this is a screen from an old webinar when the S&P was 1894, so that's going back to March. And some of the same stocks that were making new lows over the last 3 or 4 months are on there. Now, we have 3 patterns that really pull it all together for you. The first one we call the dynamic duo. It's the combination of the Chaikin power gauge rating and Chaikin relative strength. And that dynamic duo finds big winners and losers when they agree with one another. Superior returns on the upside come from stocks that are outperforming the market, and on the downside, stocks that are underperforming are likely to continue to underperform. There's one caveat. We know there are a lot of momentum traders out there. How many of you would characterize yourself as a momentum trader? If you would, type a big M in the chat box, please. Well, the reason relative strength is important to a momentum trader is that you can get a stock going up in a big, big move without the fundamentals supporting it. And typically the power gauge rating will be neutral. Just recognize that if you're trading stocks like Tesla or LinkedIn before it got a sweetheart bid from Microsoft, that you're on a high wire without a safety net. If a company doesn't have earnings, if you're paying too much for $1 of revenue, and something goes wrong, you're in trouble. So you have to have close stops. You have to recognize when things are changing, and we're going to show you how to do that in a minute. Now, here's an example of the dynamic duo on the upside. This is an aerospace stock, symbol HII, Huntington Ingalls. Power gauge turned bullish in mid-October. You broke out of that Wyckoff base, and then about 2 weeks later, relative strength turned positive. The stock was at about 120 on its way to 178. And along the way, you got buy signals, strong Chaikin money flow, but the key is the dynamic duo was strong. The market was agreeing with the power gauge model. So there's a truism here. No matter how good your fundamental research is, no matter how good the model is, whether it's a Chaikin model or Investors Business Daily or Value Line, if the market doesn't agree with you, at best that's dead money, and at worst it's real financial pain and suffering. I love what my old friend Marty Zweig said, who sadly left us prematurely, that Mr. Market always wins. Marty actually summarized how you could have made money in this whole bull market in one sentence. 2 keys to making money. Watch the Fed and listen to the market. So if you were listening to the market when you were analyzing Huntington Ingalls, you saw that the dynamic duo was strong. Then something happened right here at this peak in early August when you made a new high at our upper volatility band. And for those of you who are technically oriented, these are modified Keltner channels. You made a new high, but Chaikin money flow was negative. That's that secret pattern we've been teaching to Wall Street pros for almost 30 years. We saw it in the spider on the bullish side. Here it is on the bearish side. I know, based on 50 years in Wall Street, how hard it is to sell a stock at its absolute high. This is one of the techniques that occasionally gives you that opportunity. So after it spiked up on a positive earnings report just about a week ago, it's now been pulling back. And using this technique we're going to show you in a minute, Chaikin Money Flow being negative at a big new high, you could have been taking your profits on this stock if you were fortunate enough to buy it on any of these oversold buy signals with call options or as a swing trader. Great opportunity to get out, take your profit at what turned out to be a very, very strong peak. Now, on the downside, the dynamic duo really is your friend. So here's a really sad case for people who believe in solar energy, as I do. SunEdison, highly recommended by the institutions. Merrill Lynch had a buy recommendation on it at 28. Some of the big hedge funds owned it. But the Chaikin Money Flow turned bearish back in June or July. Same pattern as Huntington Inglis. When it made a new high up here above 30, Chaikin Money Flow was already negative. And what does that mean? Well, it meant that the institutions were taking their profits. Smart money was getting out as the public was getting in. Then the power gauge turned bearish in mid-July with the price at about 28. Shortly thereafter, it started underperforming the market. Negative earnings surprises, a very highly leveraged company. Opportunities along the way to buy put options based on our money flow sell signals. And sadly, for Merrill Lynch customers, they put a sell recommendation on the stock at $3, down from 30, which is a heck of a lot better than what ultimately happened just about 2 months later when the company filed for bankruptcy. And we captured that screen from CNBC because this is a stock that we've been talking about since August of 2015 as a bearish stock. Now, we exhibited at a conference in California, Options Industry Council, back in May, and someone came up to our booth and we were demoing the product, and I put up SunEdison. He said, "Oh my God, I bought SunEdison on the way down at 15 for my clients because Merrill Lynch was still recommending it. If I'd been using Chaikin, I would have saved a lot of money and pain." Happens to be a Merrill Lynch advisor back here in Philadelphia where Chaikin Analytics is based. Now, the second pattern that's so critical to making and keeping money in Wall Street, we call personality changes and how to spot them. We define a personality change as a stock that's been outperforming the market that begins to underperform the market. There's SunEdison. That's a personality change right there in July. And the reason it's critical to spot these stocks is that investors and traders tend to be stubborn. We fall in love with a stock or we fall out of love with it, and we're very slow to recognize that reality is changing. That's so critical. The biggest mistake investors make, other than not having a plan, is falling in love with a stock, making emotional decisions, not recognizing that things are changing. So here's an example of a stock, again, a small cap stock that my wife Sandy found and has been in and out of twice, that had a bullish personality change back in February. Can you see how our relative strength indicator makes it so easy to spot these? It went from red to green. Chaikin Money Flow was still strong even before that, was strong, and the power gauge rating was already bullish. So you had all three things lined up, and then right after that you got two oversold buy signals. Now my wife Sandy bought it here on the Brexit pullback, and I'll show you in the next slide how she knew to do that. So she paid about $21.50 for the stock, which ultimately peaked at 29. From the point of the personality change, this stock went from $11 to 29. How many of you have had stocks go up almost 200% since February? Not easy to find these stocks. We make it as easy as we can. And here's an example of what my wife Sandy used on her June 22nd webinar. She took a screenshot of our stock screener. She was looking at strong industry groups, stocks that had bullish power gauge ratings, where money flow and relative strength was strong, and she keys in on short interest and insider buying. And she came up with a list of 8 names, and there's Quad right there at 21.53. That's when she bought it. The screen also unearthed Nucor, a steel company that was 49.60 on its way to 57.60. So the screener helps you zero in on opportunities that are customized for your style and your inclination. She likes strong industry groups where everything is lined up, so narrowed the field down to just 8 candidates, 9 candidates. Makes it a lot easier to successfully trade if you've narrowed your universe down. Now, here's an example of a stock with a bearish personality change. Starbucks. We all know Starbucks. Most of us shop there or drink there, and it's a terrific store, but not a very good stock in the last 6 months. And you had this bearish personality change where Starbucks, even though it had positive money flow, went from outperforming the market to underperforming. That was back in late February with the stock at 58. And even as the market is making new all-time highs, Starbucks is down 6% from where it was when it had that bearish personality change. So great company, great product, not a good stock. Now, the third pattern that's sort of embodied in that pyramid we looked at is based on Chaikin Money Flow. And you've already seen 2 advanced looks at how we analyze Chaikin Money Flow to find winning stocks and anticipate price movement before it happens. Based on the fact that institutions are so big that they can't execute their orders all on one day. Sometimes they use options, as Mark Dannenberg has noted more than once. So a lot of people like Mark monitor unusual options activity. But the bottom line is institutions are paranoid about people knowing what they're doing, so they try and mask their buying and selling. But we found a way that we call stealth accumulation to see what the institutions are doing. So on this chart of another small cap stock, Central Garden, again, a stock my wife Sandy bought right there. And the reason I use that as an example is Sandy is not a sophisticated investor or trader. She's been at this for only 3.5 years. She works in marketing and public relations for Chaikin. That's what she did all her life. But she's mastered this simple methodology that we're teaching you today. And so here you see sideways movement for a month at the $14 level, and look at Chaikin Money Flow. It stayed green. Stock moved up, broke out, and then went sideways again, and Chaikin Money Flow stayed green. And then finally in the May-June period, when Sandy bought it on a spike down after a reaction to an earnings report, yet again, stealth buying on the part of informed investors. So you can take advantage of that by looking for stocks with a power gauge rating where the Chaikin Money Flow stays green or bullish and the power gauge rating is bullish. Now, here's an example of stealth distribution, very similar to Huntington Inglis. McDonald's had been under heavy accumulation. Relative performance of the market was fabulous, but the power gauge was only neutral because the valuation metrics were so rich. This is an example of where you're on a high wire without a safety net. Now, McDonald's is more substantial than companies like Tesla or some of the cloud computing stocks, but still, when it made its new all-time high up here in late April, look what the money flow was saying. It was red, not green, enabling you to, in one of those rare moments, as with HII, sell a stock if you're a momentum trader at its all-time high. Isn't that nice? And then the power gauge turned bearish as the stock broke down below 125 from 130. Stock started underperforming the market, so there's that dynamic duo. And McDonald's has basically gone nowhere since May. It's gone from 130 down to 115, and it's stuck down here. Now, if you had sold McDonald's here in May, but liked fast food, and we've got a little gremlin in our charts here, you could have bought Jack in the Box. You can't see it, but Jack in the Box went from 75 to 95, while McDonald's was going from 130 down to 115. And the power gauge was bullish, money flow was strong, positive earnings surprise. There are always choices in Wall Street. You could have bought Jack in the Box when you were selling McDonald's. Now, I talked about how to use Chaikin to generate income writing covered calls, and I'd just like to start with this chart to make it very clear that when you write a covered call, you're limiting your upside potential to the strike price plus the premium you receive. Now, we've refined a methodology in Chaikin Analytics, and I apologize, there is a glitch in our PowerPoint and PDF, and I apologize for that. We should have been looking at a chart of Owens Corning, where there was a momentum breakout in Chaikin Analytics at 46, and then the stock went sideways, and we recommended it as one of our bullish stocks of the week. And then in a subsequent webinar, when the stock had rallied from 46.70 to 51, we said, you can enhance the 1.3% yield in Owens Corning by writing a covered call. And in this case, you would have gotten $230 of premium for each 100 shares by writing a 50 May 20 expiration call. That's an annualized return of 51%. You bought the stock around 46.70. Worst case scenario, you sell it at 50 plus the premium, so 52.30 in just a month and a half. But what happened? The stock actually dropped, and that call expired worthless. And then again, on a webinar on May 26th, we said, well, you can do it again. Owens Corning has rallied back to 51. In this case, we were saying you could sell the June 17 call, get $185, a 59% annualized return, and that call expired worthless. The reason is we were saying to sell those covered calls at the upper volatility band. Unfortunately, because of the chart glitch, I can't show you that. If we have one more, I'll switch to PowerPoint and we'll solve the problem. But yet again, that option expired worthless. So you pocketed 230 plus 185, 415. You're still long the stock. It rallies again to the upper band at around 54, and you sell a 55 call, and that call would have expired worthless in July. So we got this testimonial from Jim Davidson back in April, titled it Better Night's Sleep and Impressive Returns. After getting hammered in August of 2015, I decided to take advantage of what Chaikin Analytics really offers. That is a better night's sleep and some impressive returns. Rather than swinging for the fences and striking out, I've learned to do what the system tells me to do and enjoy my 16% return. Thanks to the Chaikin team for giving my confidence back and a good night's sleep. Now, what is Jim doing? He's buying bullish power gauge rated stocks and he's selling covered calls. Now, we've enhanced that technique so that you can leg into that position if you want to. Buy the stock on a buy signal, wait for it to rally, sell the covered call at the upper volatility band. It's the best of all worlds. Now, part of the way we help you do that is because the buy signals are so powerful. 6 pairs of buy and sells in Chaikin. We've seen some of them. I'm going to switch. I apologize for this. I'm going to switch to my PowerPoint presentation because I don't want to subject you to the glitch that we're seeing here. So hopefully this works. I'm going to get out of that. I'm going to do a new screen share. And hopefully the glitch will be gone. We'll go into slideshow mode. Joe, tell me if this is working.
We can see your PowerPoint right now, and we're good for full screen. Yeah, it looks like I'll have to slide back to where we were, but we can see the full screen again right now.
Yeah, I apologize for that, folks. There's a glitch in PowerPoint for the Mac.
While Mark is doing this, just as a quick reminder, the chat room is available. If anybody wanted to chat in any kind of questions, simply look in the upper left-hand corner of your screen. There is an option that says chat. You're more than welcome to chat in any kind of questions about Mark's presentation so far. I'll be available to respond to any of your questions in the meantime.
Okay, thank you, Joe. So here's that Jack in the Box chart. We were telling you could have been selling McDonald's and buying Jack in the Box based on a bullish personality change, positive money flow, and power gauge. And you can see that Jack in the Box went from 75 positive earnings surprise just 2 days ago. Analysts are raising their estimates. Stock made a new high at 100 today. Now, here's our covered call experience. There's the Owens Corning chart. Here was our momentum breakout. Normally, we like to look for a sideways action. So you could have gotten into the stock at around 47. This is where we said to sell that covered call. Stock dropped, call expired worthless, rinse and repeat, and now again. So 3 times you could have generated income, all within the context of the stock going from 46.70 to 54.50. Now, here's an example of why our signals are so important, because they're based on a disciplined set of rules. So this is Varian Medical and the very strong medical products group. Buy signal in July, oversold buy. That's June, actually. That's the Brexit panic low. And you hold the stock. Maybe you take some of your profits at the upper band, but you know earnings are coming, and you look back and you see that the last 2 earnings reports were positive earnings surprises. So maybe you hold half your position and they report a positive earnings surprise, the stock spikes up, and now you take your profit. Now, we often get asked, how do I know about these signals? Well, we have an alerts program for the iPad and the desktop. I've overlaid the alerts that I used on a webinar on about July 12th, where we were looking for bullish ideas since we were bullish on the market. And we had a momentum breakout indicated in Decker. I follow a list of about 150 stocks, way too many for the average trader, so I get a lot of signals to look at every day. But Decker was right at the top. There's a yellow arrow. As I mentioned, when there's a momentum breakout, we like to wait for the stock to go sideways to down for 3 to 5 days. It did that. If you believe in this methodology, you buy in at the 21-day average, and then you get a positive earnings surprise, and the stock spikes up from 60 all the way to 68, and you take your profit. It can be as simple as that, but we have this alerts view to show you the signals in any list, ETF, index of your choice. Now, we talked about playing good defense and how it can improve your performance. So what is good defense? How do you play it? Well, Herb Greenberg, who used to write for CNBC and TheStreet.com, penned an article in January of 14 where he said it's the stocks you don't own that matter. And what he meant by that was you can reduce risk by avoiding mistakes, by avoiding weak industry groups, by knowing what stocks not to buy, and by eliminating potential losers from your portfolio. And we give you that discipline of the power gauge to help improve performance. So let's look at a couple of examples of playing good defense. These are stocks you didn't want to own in 2015. They contributed to that 17% decline in the very bearish stocks in the Russell 3000. Here's Kinder Morgan. Power gauge has been bearish since 40. Sadly, people, even advisors, were seduced by the 20% yield. And anybody who thinks that a 20% yield can be sustained indefinitely is kidding himself. But power gauge was bearish for over a year and a half. Stock was underperforming the market. You had overbought sell signals, which gave you the opportunity to get out of the stock if you had overstayed your welcome, or more importantly, buy put options, because these were ideal put setups. Now, another example is Chipotle. Power gauge actually turned bearish on Chipotle just under 700 before the E. coli bacteria crisis crushed the stock. And then the company reported a negative earnings surprise, and it started underperforming the market. Then the E. coli problem broke out. But before the stock collapsed, even after E. coli broke out over here, you got a money flow sell signal at about 600 on the way down to 380. And along the way, just before earnings, you had 2 opportunities, once in April and once in July, to put on bearish positions. The one in April was a huge home run because the stock went straight down over 18%. So a bearish put spread worked out beautifully. The one in July, you had to endure a little bit of pain because some smart Wall Street firm put out a buy recommendation even after Chipotle reported year-over-year sales decline of 25%. With no hope of reversing it anytime soon, someone said, buy Chipotle, the worst is over. So the stock ran up from 400 to about 435, 440. And look where it is now, 395 today on a new high in the market. Earlier today, the stock was down. So an example of playing good defense. Here's another example of how you can turn good defense into good offense. Cavium is a semiconductor stock. Joe Bicella, who was kind enough to fill in for me while I was getting this PowerPoint up, does our onboarding sessions to help new subscribers get up and running. And he's featured Cavium back in the spring as a potential put candidate and also a stock you wanted to avoid. Why? Power gauge is bearish, underperforming the market, weak Chaikin money flow, ideal put setup. And we got this testimonial back in June. Today I made my biggest profit yet with Chaikin, 150% from buying put options on Cavium just a few days earlier. These are the kinds of positions that Chaikin helps you find and put on. Now, the last part of the webinar before our bonus ETF section is what I call the timing secret that produces huge returns. And what I mean by that is you can use earnings season to supercharge your profits. Find bulls and bears with Chaikin relative strength, that's the dynamic duo. Use our earnings alert to know if a stock is likely to beat estimates or disappoint, and then use Chaikin buy and sell signals to time your options entry or your swing trades. Now, a lot of people are spooked during option season. The reason is there's a lot of volatility surrounding earnings reports. But we think volatility equals opportunity, especially if you have something like the power gauge rating, which can serve as your GPS during earnings season. There's a lot of speculation in the media about whether stocks will outperform or underperform, meet or beat estimates. And so most investors are spooked, and you often hear people say on webinars, well, I don't recommend that my clients trade during earnings season. I think that's a mistake. I think you can make a lot of money during earnings season if you're following a disciplined methodology. Here are some examples of that. Netflix. Back in April, we had a sell signal right ahead of an earnings report. This has happened many times with Netflix, even though it's been a big performer in 2015. And that trade was extraordinarily profitable as Netflix disappointed, went from 110 all the way down to 85. And it happened again when they reported earnings in July. You had the opportunity based on a sell signal to buy a put option or put on a vertical put spread. Ahead of the earnings, the stock dropped from 98 yet again to 85. So you can find these trades during earnings season. The same time you were selling Netflix, if you like the media group, you could have been buying Comcast. Power gauge was bullish, starting to outperform the market. Positive money flow, the Brexit buy signal was an ideal call setup. Came about 3 weeks ahead of earnings. And they reported a positive earnings surprise, and the stock spiked up to a new high, right into the Olympics. Now, here's a little bit of inside baseball. Comcast NBC very often peaks during the Olympics because that's when the interest is the highest, and great time to take profits if you're a trader in Comcast. Now, here's a mini case study to show you how important the Chaikin power gauge rating and money flow can be during earnings season. Let's go back to March and look at PVH, which is also a stock that's in the First Trust Unit Investment Trust. All three of them own PVH as one of their 20 stocks. On March 22nd at 4 o'clock on Street.com, the headline was, PVH stock closed down ahead of tomorrow's earnings. And then less than an hour later, Jim Cramer chimed in, exercise caution with PVH ahead of earnings. Now, this isn't meant to be a knock on Jim Cramer because he's been featuring Chaikin Money Flow on Mad Money for the last year or so. But here's what actually happened. The next morning before the opening, PVH, which is a big apparel company that owns Calvin Klein jeans and Tommy Hilfiger and Maidenform bras and so forth, actually reported better than expected earnings and traded up 7% pre-market. Here's what it looked like. That green arrow is where Jim Cramer told you to be cautious. Power gauge was bullish, and look at Chaikin Money Flow. Institutions were buying this stock ahead of that earnings report. And if you look back, the last two earnings reports had been positive earnings surprises, as was the next one. So the stock spiked up and kept going, then pulled back, and then you got another positive earnings surprise, and it spiked up yet again. You got a buy signal on Brexit, and earnings are due out, as you see in the upper portion of the screen with the green box around it, on Wednesday, August 24th. And you've got a green exclamation point. That's our earnings alert. That's telling you that analysts are raising their estimates on PVH. And look what the stock did today. It broke out above 100 and was up 4.5% earlier today when I pulled this chart. So become independent of the gurus on CNBC or Street.com and think for yourself, and you'll sleep better and you'll make more money. Now, we got this testimonial from someone who'd only been using Chaikin for several weeks, already closed out 2 trades for gains of 70% and 115%. The key here is Eric M. said, I've tried different software packages and programs, and Chaikin Analytics is by far the most straightforward analysis product I've ever used. I hope in what we've seen so far, you see how simple the process can be. Now, I don't want to run afoul of Charlie Munger, who's Warren Buffett's lifetime partner at Berkshire Hathaway, who said anybody who thinks investing in the market is easy is an idiot. And I agree with him, but we're giving you the tools to break the mold. Now, a couple of other examples of earnings surprises where we actually told people to buy put options ahead of the earnings. LinkedIn. We had a sell signal back in January ahead of the earnings report. The stock was 200. We included it in the list of 8 stocks to be out of and buy put options on before earnings. And the company gave extremely negative guidance and dropped 50% from 200 to 100. Imagine how profitable a put option was for people who followed that recommendation. Now, LinkedIn was going nowhere until Microsoft, the market's equivalent of a rich uncle, came in with what I consider to be an absolutely outrageously rich cash bid in the 190 area for LinkedIn. So they sort of saved the company from this, because on the same day that LinkedIn reported, another cloud computing stock, Tableau software symbol DATA, D-A-T-A, reported a negative earnings surprise. The previous earnings report was negative, and the last 2 after that have been. And on the exact same day, this stock also dropped 50%. We had had a sell signal 3 weeks before, so we knew to be on the lookout for a negative earnings surprise. Power gauge bearish, underperforming, money flow negative, ideal setup. And without that rich uncle to bail them out, look what's happened to Tableau since January. It's gone nowhere. It's basically gone sideways while the market's making new highs. Now, our stock screener enables you to find stocks that are due to report. So for a webinar last week, I looked for the Russell 3000 for all stocks with a bullish power gauge rating that were due to report earnings the day after the webinar. And among the stocks that the screener highlighted was HII, which we already saw made that new high with negative money flow, and Priceline, which was 1350. And when they reported a positive earnings surprise the next day, the stock spiked up 75 points. So we give you the tools to find these trades. Now, because of that, we got another testimonial, 400% return in 2 weeks, first 2 weeks of using Chaikin Analytics, AMD call spread and Google put spread. Now, what's interesting about this is, to my knowledge, nobody at Chaikin has featured AMD or Google. Torsten found this in the first 2 weeks of using Chaikin on his own, using the screener and options play. So now this special bonus that I mentioned, this is the basis for a whole separate webinar. You can use our sector and ETF rankings to find profitable trades. We rank the Select Spider sector ETFs by their power bar rankings. You can drill down on a strong sector, use the power bar ranks to find the ETFs in that sector with the strongest potential. And then if you want to take it to its ultimate conclusion, you can find the strongest stocks in a strong ETF and buy and trade those as well. So here's what it looks like. This is our Select Spider sector ranking of the 9 sectors in the S&P 500. Healthcare had the best spread between bullish 24 and bearish 5 stocks. So we then go to the healthcare ETFs, and look how many there are to choose from, over 20 of them. The one that most people trade is the IBB, but that had a bearish spread, 38 bullish, 41 bearish. The top of the list is medical devices. That's where Varian was, the stock we looked at earlier. 16 bullish stocks and 1 bearish stock. Now, if you had been looking at the best ranked ETFs, you would have found WellCare Health, WCG, anytime over the last 4 months, as the stock was going from 85 to 116, making a new high again today. Positive earnings surprises. How do we know that? Because that EPS icon is colored green on the chart. And plenty of opportunities, oversold buy signals to get into option positions. The one we highlight again came before earnings, oversold buy signal at a price of about 104, and now the stock is 116 after a positive earnings surprise. So now you know the 5 keys to trading options like an expert, plus this special advanced look at our ETF functionality. Chaikin Analytics, which is what we've been using to give you these examples, has options play integrated, the screener, earnings alerts, and now we've actually got intraday charts as well. So the last bar is live and dynamically updating, and we've got a pop-up intraday chart for those of you who need to see intraday action for your options trading. Now, we got this endorsement, which is, from my point of view, the king of endorsements, from John Malden at Malden Economics on CNBC all the time. He said just 2 weeks ago in his thoughts from the front line, I'm impressed by what Marc has done. My analysts are enthusiastic users of Chaikin Analytics. They use it to analyze the trades and recommendations of our writing team, giving them feedback and insight. Marc's system has been integrated into our daily routine, our process for vetting and evaluating potential investments. It's as good an endorsement as you can get from a real market guru. So Chaikin Analytics normally sells for $1,950 a year, annual subscription. But as a webinar special to Mark Dannenberg's options community, we're reducing the price by $200 to $1,750. Joe Bicella is typing in a link to our offer page. You can go to chaikinanalytics.com/edge, and that offer expires on Saturday, August 13th. Now, in addition to everything we've been looking at, the Chaikin team adds more value to your subscription. We have a small group and one-on-one tutorials by Joe Bicella, Michelle Greenblatt, the whole Chaikin team. We've just added a new person, Josh, to the team. The whole purpose is to get you set up and using Chaikin Analytics as quickly as possible, knowing all the features, answering your questions. We do onboarding sessions every day at 2 o'clock. In addition to that, you'll get John Schlitz's Morning Insights, comes in your inbox before the opening, so you don't have to stay glued to CNBC to see what's happening in the pre-market and what happened overseas. And then you get my weekly Market Insights newsletter, where in addition to market commentary, we have a bullish or bearish stock of the week. Now, last Sunday, my bearish stock of the week was Under Armour. It had just reported earnings, had a very negative reaction, and had retraced part of that down move. And I used options play to find a vertical put spread, which turned out to have a really impressive risk-reward ratio. Buying the 40.5 put with the stock roughly at 40, and selling the 36 put expiring on September 23rd would have cost $150. If Under Armour is 36 or lower by the September expiration, this trade will return a 200% profit, and you've limited your risk to $150. Perfect way to use options to be short a stock with limited risk. Now, one final testimonial, 10x return in 5 days. 5 days I've been using Chaikin. I paid for the subscription over tenfold. These results are nothing short of astounding. Please extend my thanks to the entire Chaikin team. And team is really the key word here. As I mentioned in the beginning of the webinar, my wife Sandy and I started this company in 2009. We're now 27 people. We're all dedicated to your success. Joe Bicella heads what we call our success team. We're there for you. And to show you how much we care and to make it as easy as possible to make that decision to buy Chaikin Analytics, when you subscribe to Chaikin Analytics by midnight tonight, we'll take an additional $100 off the cost of Chaikin Analytics, reducing the price to $1,650, and we'll give you a free enrollment to our 2-day, 4-hour Options Academy course. I think it's 4 hours, it may be 3. The value of that is normally $699. So chaikinanalytics.com/edge. Subscribe by midnight tonight and get $300 off plus free enrollment in our Options Academy course. Now, Mark, you may want to say a couple of words to wrap up the webinar.
I was just looking for the mute button, take myself off of mute.
No, that's always a problem.
You know, I just wanted to chime in here, Mark, and say no matter how many times I go through a presentation where you talk about Chaikin Analytics and your tools that you've created, I always learn something new. And I just want to say to anybody who's listening, I've been trading for over 30 years, and I still am amazed and kind of in awe of how clean the Chaikin Analytics are. So one of the things that I think is relatively complicated or confusing for people when they're starting out to trade options is where do I start? How do I get integrated into the market? You know, it's one thing to know what strategy that I want to trade, but it's another thing to know when to take a trade and to have the strength and power of analytics, but presented in such a simple way that it's not mind-bending for you to be able to figure out whether or not this is a trade that you want to take. And that's exactly what Mark and his team have created. And, you know, personally, if you're really committed to building a trading business, or you're perhaps on your learning curve of learning how to perhaps integrate options trading more substantially into your daily life, I think you can't go wrong with Chaikin Analytics. And frankly, the price that Mark is offering here is something that has a very, very rapid ROI to it. And I say that from experience of having traded for 30 years, and in my early days, I paid a lot of money for a lot of different programs and a lot of stuff that, you know, I learned a lot about, but there's a tremendous value equation here in what Mark is presenting. And not only do you get the tools, but you get the passion and commitment and integrity of the Chaikin organization, who, as I said earlier, I've come to know in the last couple of years, and am quite impressed with you, Mark, as well as your whole team.
Well, thank you very much, Mark. While Mark was talking, I clicked on that link in the chat box, and that brought up our shopping cart with the discount already pre-populated. And as I said, when you subscribe by midnight tonight, in addition to that discount, we'll get you enrolled in our Options Academy course. So I'd really like to thank Mark Dannenberg, not just for the kind introduction and words, but for the opportunity to present what I feel very passionate about, the Chaikin methodology, to the options moneymaker community. And with that, I'll turn it back to Joe Bicella, who will wrap up the webinar.
Excellent. All right. Well, Mark, thank you so much for joining us. Thank you for the presentation as well. Just as Marc Chaikin mentioned, you can access the link to join, become a Chaikin Analytics subscriber by referencing the chat room. Again, chaikinanalytics.com/edge. And you'll see the $300 discount automatically applied. And we'll also get you registered for the upcoming Options Academy course. That is a 4-hour course full of all of the most important content that you need to see in order to successfully trade and trade options using Chaikin Analytics. So with that said, please feel free to give us a call again before midnight tonight, 877-697-6783. Or simply access our website, chaikinanalytics.com/edge. We'd love to have you on. We have one more subscriber-only webinar taking place this week. That will be tomorrow at 2 o'clock Eastern Time, and we'd love to have you join us. And no better way to do that than to take advantage of Mark's offer. So on behalf of the whole team, thank you very much for joining us. Look out for a recording of today's webinar. We'll send that out tomorrow morning. But in the meantime, have a wonderful evening, and we'll see you tomorrow on the onboard session.